Channel. I'm Ashley and thank you so much for tuning in. So today's going to be a pretty quick video focusing on M's and W's, and I decided to do this video because a lot of people don't recognize M's and W's, or they don't realize what M's and W's they are not supposed to take and which ones they are supposed to take. So I decided to create a quick little video just to help with being able to visualize those. Now, for one, we have our EMAs. I'm not sure why people tend to take off this yellow one, the mustard. You know, every EMA is important, especially when learning. This EMA tends to spell out the letters perfectly if you're paying attention to it, but a lot of people take it off, and I'm noticing these are the same people who have trouble with level counting or the cycle, because they're like, oh, it makes my charts too messy. And it's like, yeah, but you have 50 billion indicators on there, and that's one of the most important ones. So why do you have all this other stuff, but you don't have that? So anyways, in this video, the greens are the buys and the reds are the sells. So I have a little trick. It's called green up, red down, green up. So we're going to start here. Green up, red down, green up, red down. That's an M. We're going to do this one. Red down, green up. That can be a V, or you can continue it with red down, green up, which is an M. I'm sorry, not an N, a W. And then you can come into this one, green up, red down, green up, red down. That's an M. You can come back into it, red down, green up, red down, green up. That's a W. This was a good example, red down, green up. This is a W on a smaller time frame. Or you can do green up, red down. It's an M on a smaller time frame. Or it could just be, you know, an A, or this can be a V. But of course, this is an M when you complete the cycle of that pattern. You can have red down, green up, red down, green up. That's a W. And then you can, of course, it could be an M on a lower time frame, or a V. Could be a V as well. Here you have like red down, green up, red down, green up, green up, red down, green up, red down, red down, green up, red down, green up. So if you're having a hard time understanding what you're looking at, just green up, red down, green up, red down would be an M, and red down, green up would be a W, or red down, green up, you know, V, or a W on a lower time frame, or green up, red down, an A or an M on a lower time frame. And when you're looking at the entry patterns, you know, like the railroads and the morning stars, and, you know, for example, like here, this entry, this would be considered, you know, you can say this is an A or an M, but you have to pay attention to where the entries are in context. Like here, you know, to the Mayo, this is an M off the Mayo, is just a smaller time frame, you know. So one thing that I've noticed is, I'm going to point this out. A lot of people don't realize this is what a cycle typically looks like. Sorry, it's kind of very ugly and weird, but a lot of people expect M's to look just like this. And of course they do. And W's to look just like this. And of course they do. But that's kind of like hardly ever how a level in a cycle looks. It's typically always like this. You'll see an M with a smaller W with the, you know, a second M here, with a W with a smaller M in the middle, and with a W. Like, you'll see so much. And a lot of people don't realize, especially in anchors, this is a larger structure, but they don't realize they really shouldn't trade in here. Or actually you can, I do, but you just have to range trade. So what I notice, what a lot of people are doing is, say we're in peak formation and we came out to level 1. A lot of people trade this M and they say, oh, I see a perfect M. I see a perfect M. They trade this M. This M is trading back into the peak. This is what they mean by do not trade back into level 1 consolidation. Level 1, consolidation. 1, boom, and out into 2. Okay? And it's always some form of an M back into that V. And then here, People will take this M, come out. There's always this W back into the peak formation. And they're like, oh, it's a W. Let me take it. Boom, got killed, and they moved into level 1. Well, they moved out of level 1, I'm sorry. So people take the M's out of level, out of level 1 consolidation back towards the peak, and they get slammed, and they're like, oh my gosh, this method doesn't work. I took the M and a W and I get slammed. You're taking the wrong M's. You know what I'm saying? Obviously, when you're level 2, you can do that. You can come back in. When you're in level 3, you can come back in and make sure you reverse out. You can trade both ways in level 3. You can trade both ways. You could trade both ways in level 2. Level 1, it's not advisable. Of course, it goes back inwards. Of course, you could take that, but why would you want to do that? So a lot of people don't realize there's areas where you're supposed to take M's and W's. You take them off the highs and lows, whether that's of the day, the previous day, of the weeks, of the month, of the year. Of course, you need to have all your directional biases on point and your confluences, but that's where you take them. You could take them off of the 50, the 200, the 800, the 3200 EMA, the 4800 EMA. And I do add those EMAs to my charts. As you can see, there's the green one. That's the 3200. You can't add the 4800 on MT4 desktop, but you can on the mobile. And really, I just added those because obviously this is the 200, the 400, the 800, obviously 200, 4 hours. And then, so I added the 3200 and then I added the 4800. So to me, that's considered like a whole work day when you get around the 3200 and the 4800. And by a whole work day, that's 24 hours, which is pretty much how, the forex market operates, except for that 1 hour it's closed. But it's essentially a 24-hour day business if you round it up. So those are areas, key trap areas, off the daily, weekly, and monthly, even the 4 hour. What else? Quarter points, the 50 figures, 0 figures, 000 figures. Those are all places I look for reversal patterns, which are essentially M's and W's, or head and shoulders, or U's and upside down U's and peak spike tops and bottoms. Like those are essentially all M's and W's. It's just variations. And of course, like for example, here you see an M and it comes down and it creates like this weird W back up, advanced, and then another M down and another W back up. And the reason why they're advanced is because most likely they're probably counter trends. You know what I'm saying? Like, look at this. This is an M with a second leg that's lower, which is fine. You can have a second leg lower or higher of an M and or W. And then there's a W here, which is weirdly construed, and it's going back up. So, why would you want to be taking these? They don't pay out as much. Of course, you could still take them, but they don't pay out as much. And a lot of people take the wrong M's and W's, and they're like, oh my gosh, it didn't really go any far. Dude, it's counter trends. Why would I want to be in this sale taking any W? Look at this W, doesn't go anywhere. Look at this W, doesn't go anywhere. And of course, look at this W, it's not going anywhere. But look at these M's, boom, boom, boom. Like, why would you want to take a counter trend? Of course, by all means, catch your pips. I catch them, but it's not advisable. Here, we're buying. Why would I want to take this M? It's going nowhere. We're buying. Why would I want to take this M? It's going nowhere. We're buying. Like, why would we want to be taking counter trend trades unless you're kind of really just scalping? But if you want to look at this, we're buying, then we're sold. You gotta be smart about where you take these M's and W's. And a lot of people don't realize that. They're just like, I watched the video and I'm learning M's and W's and they're not working, so I'm done. This doesn't work. There's a proper place and time to take everything, and a lot of people don't even realize that. So with that being said, I hope this short video helps you. I'm going to try to keep these straight to the point. Like I said, these are just little tips on how to help you become a better beat the market maker trader. It definitely works. It helps me if I'm like, oh, this is too choppy. Like here, this is choppy. Of course I know the direction, but this is choppy. W, M, M, which essentially is a W, an M, and a big fat W, up. And please be mindful of those big fat W's and M's in the higher time frames and whatnot, because a lot of people don't even bother to check the hourly or the 4 hour at minimum. I check the daily, I check the weekly, I check everything. I check the monthly. I make notes of it all, and that's the best way to avoid being slammed, is always check those higher time frames. That's how oftentimes I realize I'm in a reset condition, peak reset condition, or a reset continuation condition, because I check those higher time frames, and a lot of people want to know about that as well. So we'll go into that later. But once again, don't forget to like, share, and subscribe. Anybody that you know that's learning this method, have them watch this, because maybe it can help them as well. Thank you so much for tuning in. And once again, I usually post charts on my Instagram, AshshmoneyD, and the link is below. Thank you so much, and happy trading, and good luck this week.